we've become relatively well known in the last 20 months for making a significant investment in Bitcoin and standardizing on Bitcoin as our primary treasury reserve asset. Why don't you take everybody back to March and give everyone sort of a brief introduction into our thought process and what's occurred between then and now for MicroStrategy?
Yeah, I think March of 2020 was pretty transformational. What we ended up with was a pandemic which severely impaired operations throughout the business world, and it became very hard to conduct business as usual. And that was coupled with a monetary response of lowering interest rates to zero and beginning to pump liquidity into the financial system of the world. And we didn't know what would happen. In our core business, we realized we could run more efficiently, and we had a digital transformation of our core business. And we started Zooming everywhere and using the web and using YouTube and using Twitter and the like. And I think everybody's familiar with that. What they're less familiar with is on the balance sheet side of the business, MicroStrategy had cash of in excess of $500 million. We had a lot of cash, probably half of our market cap was cash. And we were investing that cash in sovereign debt. So our cash and credit on our balance sheet, it was now yielding 0% interest. In the macro economy, we saw a K-shaped recovery. All the Main Street companies had a hard time operating, but all the Wall Street stocks and equities and assets all appreciated rapidly by May and June timeframe. So there was clearly something different going on, a delamination between Wall Street and Main Street. And our conclusion in that second quarter was we were going to be in an environment where there was going to be monetary inflation. And because we had so much of our capital tied up in cash and credit, we were going to have a negative real yield on that. If we're getting 0% interest, and if the cost of capital leaps and triples, then we'll have a negative real yield. As it turns out, over the past 18 months, I mean, the inflation came in yesterday, or CPI inflation came in like 5.3 or 5.4%. And the S&P is up 24%. And the S&P is a surrogate for the cost of capital, and it's also a surrogate for the monetary inflation rate. Another way to say it is our shareholders expect us to get a 24% yield on that capital. And if we were going to get 0% and their expectation is 24%, their view is, well, out of $500 million, you torched $125 million in shareholder value in 12 months. So we kind of calculated that in Q2, and we realized that if we simply held cash and credit on our balance sheet for the next 4 years, we were going to destroy $250 to $350 million in shareholder value, and we needed to do something. And so the something is either invested in property that'll appreciate faster than the inflation rate, or we need to give it back to the shareholders. And we really weren't sure what was the right thing. We knew if we gave it all back to the shareholders, we'd be decapitalized. We'd have no treasury assets left. And so that didn't make any sense. And we thought, well, if we just invest it all in something, our shareholders might think we were moving too aggressively. So we split the difference, and we announced a $250 million tender offer to buy back our stock, and a $250 million program to buy hard assets. And we searched through everything under the sun. We looked at equities and real estate and gold and commodities and crypto. And we concluded that what we wanted to buy was digital gold, or Bitcoin in this case, because it was the dominant crypto asset network, capped at 21 million, and a naturally engineered inflation hedge. And at the time, you could divine that by looking at first principles, but it wasn't obvious to the entire world that Bitcoin was the solution to inflation. And it wasn't obvious to the world how it would be treated by the mainstream media and mainstream governments. And it wasn't obvious to the world that inflation was going to run 5.5% for consumers and 24% or more for investors. All these things were a little bit murky, but we had a strong inclination that was going to happen. So we made our decision. We bought the Bitcoin. We did the Dutch auction. We ended up with our shareholders endorsing the decision. And the way they endorsed it is they didn't tender their shares. They only tendered about 60 million, and we had an extra 175 million in capital. So we put that into Bitcoin. And we did it around 10,000 to 12,000 a Bitcoin. Well, Bitcoin's price went up, our stock went up. We eventually realized that our shareholders were delighted. Our stock went up to the highest price it had been in a decade. We were able to do a convertible debt offering, buy more Bitcoin. We bought that at just below 20,000, I guess. Bitcoin kept going up, our stock kept going up. We were able to do future financings, more convertible debt, more senior secured debt, more equity issuance. And to make a long story short, our strategy was initially defensive. We just didn't want to see our balance sheet crumble to zero under monetary inflation and a negative real yield. It was defensive. Then it became opportunistic. Then it became strategic. And we realized that we should be both an operating company and we should be a Main Street company and a Wall Street company. We have an operating business, MicroStrategy software, that was growing 10% in the last quarter or more in the last few quarters. And we're committed to that. And then we have a Wall Street business acquiring and holding Bitcoin, which is the same as acquiring and holding digital property, which is the same as acquiring and holding property. We became a property acquisition, maybe property development company. You could think of it in that way. And today, as we fast forward 14 months, we've now got the $500 million MicroStrategy software business, which is generating healthy cash flows because of our digital transformation and back to growth. And we have about a $6.5 billion Bitcoin property business, which has been growing, of course, much faster than that. And we feel like the Bitcoin strategy, it helped our shareholders. I mean, our stock is up by a factor of 5, created billions and billions of dollars of shareholder wealth. It helped our balance sheet. We've got a $3 billion or more investment gain on our acquisition. So that's helpful too. And it helped our core business because it injected electricity and awareness into the brand and allowed us to reach new constituents, new businesses, media. There are 200 million people that feel passionately about Bitcoin. So we tapped into a digital transformation zeitgeist, which has been helpful for employee morale, customer morale, and marketing and sales.